Ever held a winning trade and told yourself, just a little more, then watched the entire profit disappear in front of you? Or maybe you closed a trade too early because you were scared the market might turn against you, only to watch price fly straight to your take profit? These two emotions, greed and fear, are silently destroying your portfolio. And if you don't learn how to control them, they will control you. Welcome to the channel, traders. Today, we're going deep into the two most dangerous emotions in the market, greed and fear. Not indicators, not strategies, emotions. Because no matter how good your technical skills are, if your emotions control your trades, you'll always end up on the losing side. In this video, you're going to learn the psychology behind greed and fear, how these emotions quietly manipulate your decisions, and most importantly, how disciplined traders use control and consistency to win. So if you're ready to trade with confidence and finally stop sabotaging your own portfolio, hit that like button and let's begin. Let's talk about the real battle in trading, and I can promise you, it's not on the chart. Trading is 90% mental and only 10% strategy. You can have the best indicators, the cleanest entries, and the perfect trading system, yet still lose. Why? Because the market doesn't create your emotions. You do. The chart doesn't care about your wins or losses, but your mind does. When you win a trade, your brain releases dopamine, the same chemical that makes gambling addictive. You start craving that feeling again, which often leads to overtrading and taking bigger risks. But when you lose, your brain switches to panic mode. Loss aversion kicks in, meaning the pain of losing money is twice as strong as the joy of winning. That's why traders close winners too fast and hold losers too long, hoping they'll magically return. Imagine this. You enter a trade, it goes 1R in profit, your plan says, hold. But fear whispers, what if it reverses? You close early. 10 seconds later, price rockets straight to your take profit. Right there, that's your brain hijacking your strategy. And if you don't recognize that emotional voice, it will continue to destroy opportunities. Now, let's reveal the first major enemy of every trader: greed. Greed is that voice that tells you, just hold a little longer. You're going to be rich. And ironically, greed doesn't show up when you're losing, it shows up when you're winning. Here are the biggest signs that greed is running your account. 1. Over-leveraging. You increase your lot size because the last trade was a winner. You think, since I'm winning, I can risk more. One wrong move, the account collapses. 2. No clear exit plan. You enter the trade, but you have no idea where to take profit, so you rely on hope instead of rules. 3. The one more push mindset. Price is at your take profit zone, but greed whispers, it's still going, don't close. And then, a sudden reversal. Your winner shrinks and sometimes turns red. 4. Holding losers too long. You refuse to accept the loss. You wait and wait, hoping price will magically return. Let me give you a real example. You buy Euro USD. It goes up plus 50 pips. You're already at your TP. But greed says, that's not enough. Double your profit. So you hold. Price suddenly drops, faster than it climbed. Your plus 50 pips become 10, then 3, and before you can react, you're negative. That's greed tricking you into believing there's such a thing as infinite profit. The market doesn't exist to make you rich. It exists to punish those who think it owes them more. Here's how disciplined traders beat greed. Always set your take profit before entering a trade. Stick to your trading plan no matter how tempting the chart looks. Record emotional triggers in a journal. Learn your weaknesses. Because in trading, consistency beats desire. And the trader who knows when to walk away always walks away with more.
Now let's talk about the second emotion that kills more trades than any bad strategy. Fear. Fear shows up when your money's at risk. It turns confidence into hesitation and winners into tiny gains. Here's the truth. The pain of losing is twice as strong as the joy of winning. That's called loss aversion. Your brain would rather protect what you have than allow you to win what you deserve. So how do you know fear is controlling you? 1. Exiting too early. You see a little profit and instantly close the trade, even though your plan says to hold to target. Fear whispers, take it now, before it disappears. 2. Not pulling the trigger. You analyze the chart, you confirm the setup, everything is perfect. Yet you freeze. What if it loses? And you miss the opportunity entirely. 3. Moving stop loss out of panic. Price pulls back slightly, you get scared, and move your SL closer. Then, boom, tap, hit, gone. And what happens next? Price rockets straight to your take profit without you. That's frustration. But the real cause is fear. The market didn't stop you from winning. You stopped yourself. So how do disciplined traders overcome fear? Trade with calculated risk. If the risk is planned, the outcome won't scare you. Use smaller positions, smaller risk, calmer mind, better decisions. Accept that losses are part of the game. Even the best traders lose, but they don't panic. They manage risk and keep executing the plan. Because at the end of the day, fear doesn't come from the market. Fear comes from not trusting yourself. By now, you understand the battle you're fighting. Greed versus fear. But here's a powerful truth. You can't remove emotions from trading. Traders aren't robots. But what you can do is manage emotions through discipline. Because discipline is what protects you from yourself. So how do you actually stay disciplined? 1. Have a written plan. Before placing a trade, know your entry, stop loss, and target. If it's not in your plan, you don't do it. 2. Backtest your strategy. When you've tested a system 100 times, you trust it even when your emotions want you to doubt it. 3. Set alerts instead of watching every candle. Staring at charts makes you emotional. Alerts allow you to walk away and reduce impulsive decisions. 4. Track mistakes in a trading journal. If you don't measure your behavior, you can't improve it. Journaling helps you find emotional patterns and break them. See, discipline is not about being perfect. It's about being consistent. When you follow your rules, trade after trade, emotions lose their power. And suddenly, you're not just taking trades. You're behaving like a professional. The traders that win aren't the smartest. They're the ones who stay in control when others lose theirs. So, what separates losing traders from real traders? It's not indicators, it's not luck, it's mindset. Real traders know that opportunities come every day. They don't chase trades, they wait for the setup that matches their plan. They don't fear losing because they've already accepted risk before entering the trade. Losses don't surprise them, they manage them. A losing trader sees a red candle and panics. A real trader checks the plan. A losing trader hopes. A real trader executes. Here's the mindset shift you must adopt. You are in the business of managing risk, not avoiding losses. Once that becomes your belief, emotions stop controlling your decisions, and you start trading like a professional, calm, confident, and consistent. Now I want to hear from you. Which emotion controls you more when you trade? Greed or fear? Drop your answer in the comments because self-awareness is the first step to control. And if this video helped you understand your trading emotions better, Make sure to like, subscribe, and follow for more trading psychology lessons that will make you a smarter, calmer, and more profitable trader. Up next, a video you don't want to miss. Trading confidence, how to build it slowly and never lose it again. Thanks for watching. Trade smart, stay disciplined, and I'll see you in the next one.